It's always been a good idea to diversify your wealth across different countries and into different currencies, especially so as the world becomes more multipolar. But if you're worried about taking on too much foreign currency risk, today we're going to share with you currencies that are actually pegged to major currencies you may already hold and how you can get bank accounts, residence permits, and more by investing into these pegged currencies. The lesson we've seen in recent years is that for currencies like the US dollar, it's no longer always number go up. We've talked for years about currencies like the Georgian lari, the Armenian dram. When you saw the war between Russia and Ukraine break out, those currencies outpaced the dollar dramatically in 2022. They were always high yielding. Now you got a pretty good gain on those if you held them earlier. I was recently on CBS News in the US and I talked about how the Mexican peso has gone up dramatically, about 20% in less than 2 years against the US dollar. And so the idea that foreign currencies always go down against your potentially stronger base currency like the dollar, the euro, the pound, it's still oftentimes the case, but it's changing somewhat, and we are seeing more emerging world currencies that are performing more strongly against the dollar, for example. So sometimes having some of those currencies could be a good thing. But let's talk about how you can reduce or eliminate that foreign currency risk with currencies that are pegged to the US dollar, the euro, the British pound. And what you can do is you can make things like bank deposits, you can buy real estate, you can collect your rent in these currencies, which gives you a certain kind of diversification. It gives you a certain asset protection. There are certain risks that come with, for example, holding US dollars. If you want to send them, they have to go through the US. Who knows who's on the bad side of the US today or tomorrow? That may not apply to you, but sometimes it's just easier dealing in a foreign currency where I want to send it from my account here in this country to my account there in this country, or I want to send it to somebody else. I don't want to have to be moving dollars around the world. It's more expensive. It's more complicated. There's more banks involved. So if I place my money in other countries, in other currencies, again, I can have banks, I can buy real estate, I can do things to get me residence permits. What you want to be aware of is there are countries like a Georgia, like a Serbia, for example, where they have their own currencies. And again, the Georgian lari has done relatively well. It's down a little bit now against the US dollar, but still done relatively well in, let's say, the last 2 years. They're going to sell you real estate in dollars or in euros, and that happens in a number of places where everyday transactions, Cambodia is another one, maybe done in a local currency, but big transactions are done in the main currency, so it doesn't matter what their currency is in that case. We're not talking about the Bhutanese ngultram, for example, which is pegged to the Indian rupee. We're talking about currencies that are pegged to the major currencies. Why would we be interested in this? Besides the asset protection benefits, besides the diversification, besides the fact that, hey, maybe real estate in a country that's emerging faster, hey, their currency may be pegged to the dollar, but the yields are higher on real estate, or the property's growing at a faster rate because the country is growing at a faster rate. You can also get higher yields in just the bank. So if you look at Azerbaijan, for example, the Azeri manat is relatively pegged to the US dollar. Interest rates on dollars in their own country are like basis points, obviously much lower than what you get anywhere else these days. 7% is what you'll get on their currency. And so there's a little bit of round-trip transaction cost if you eventually want to get your dollars or back. And obviously, yields on dollars have gotten up to being not that far from 7%. But you're still getting a couple of extra points by holding it in their currency, and theoretically, you don't have the currency risk that you would in something else. Sometimes if you put assets into a local currency, you can actually get a residence permit, and so you have the opportunity to live in another country. And so what Nomad Capitalist does is we help you get bank accounts, protect your assets, diversify, protect your cash, protect your personal freedom. Whether the currencies are pegged or not, we can help you put together a portfolio of banks and residence permits and passports, as well as if you want to actually move, you can dramatically lower your taxes. And we help people do that all under one roof with a network of people all around the world that we plug into one system to create a totally holistic plan that we can then execute for you. Before we get to the list of countries, obviously there are some other countries that have just taken on the US dollar as their currency. So effectively that's happened in Panama. The new president of Argentina wants to do that in Argentina. Ecuador did that about 20 years ago, taking on the dollar, while not part of the European Union, has just taken on the euro. There are currencies that have that. Let's talk about the countries where they have their own currency. You get the benefits of diversification if you like that country, if you like that currency, but it's pegged. So we mentioned Azerbaijan, 1.7 to the US dollar. So $1 buys you 1.7 Azeri manat. Not much of a residence permit or citizenship situation. It's not like an asset protection hub. It's a place that, in my experience, I think other people in the industry, it's probably like the most laissez-faire banking jurisdiction in the Caucasus. So we've talked a little about Georgia. We've talked about Armenia. I like those. Azerbaijan feels like almost a little bit too laissez-faire, like what's going on here? But you can open bank accounts there. You can diversify your cash. Probably not a place on most Westerners' radar, but a place that definitely has a banking sector, and I mean the country has money. Bahrain, one of the more liberal countries in the Gulf, the Bahraini dinar. $1 is 0.376 dinars, so it's actually their currency is worth more. $3 almost buys you one. What I like about Bahrain, I mean, obviously Dubai gets a lot of attention. Bahrain does not get as much attention, but it's known again as being more liberal. You can buy property there. You can get a residence permit. It's a very tax-friendly country. And so you don't have to necessarily live there. You don't necessarily have to live in your property. You can rent it out. There's actually decent rental yields. And again, the property situation isn't really bad on the tax side either. And you're not going to be working towards citizenship, but you can have an asset in another country with good rental yields in another part of the world where you have potentially, if you're buying in an area like Sif, for example, you're going to have decent, expat tenants, and it's just diversification. Plus, if you ever wanted to live there for whatever reason, you want to lower your taxes, probably being the best one. But who knows what could happen in the world? Who knows what could cause you to want to leave your country? You have the ability to do that at any time, and you're basically getting paid for the privilege. Plus, once you buy the property, you're not only required to open a bank account if you want residence, but you are able to open a bank account where you can, deposit additional sums into their currency. If you want to, keep it in dollars, you can do that also. But you have residence, and then with that, you're fueling that with the property and the bank account in their currency. Belize dollar, not really as much to do there, but it's a country that people talk about. 2 Belize dollars to the US dollar. You're not really going to have as much access to that in the banks there. It's not going to be something that you're going to really run into, but it's one to be aware of. Bulgaria, they pushed the date back on moving to the euro. They're looking now, I think, at 2025. 1.95 lev to the euro, so almost 2 to 1. That's probably not a long-term proposition. Bulgaria, interesting place in terms of being tax-friendly, though. You have a lot of European citizens who just are able to move to Bulgaria as of right. Not as easy, in my opinion, for non-European citizens, although they do have a residence program where you can slowly work your way towards citizenship. If you like the idea of investing in Bulgarian markets, you can do that, but I'm not sure that's a long-term play. Limited banking options in Denmark. They have the Danish kroner. It's within a 2.25%, I think, band of 7.46, like basically 7.5 to the euro. I think that there have been some banks there. It's harder to get into. It's probably not an option for most people, but it is an option if you can somehow find a bank with Danish kroner that's pegged to the euro. If your currency of choice is the British pound, you have the Gibraltar and Jersey pounds, basically 1 to 1. Both countries that offer tax-friendly residence options. Probably not really, utilitarian as well. It's almost like the Brunei dollar pegged to the Singapore dollar. I don't know, what are you going to do in Brunei? You can, in this case, live in Gibraltar and Jersey, but I think you're probably just dealing in British pounds or dollars. We're seeing some interesting stuff out of Gibraltar in terms of banking. So 2 countries that could be on your radar, not so much perhaps for that reason, but to be aware, they have those. I think that the relationship with the UK means you're probably not getting as much diversification. One that really stands out is the Hong Kong dollar. So there's this kind of narrow band of 7.75 to about 7.85. So again, it trades in this narrow range against the US dollar. They're talking about bringing back the Capital Investment Entrance Scheme, the CIES residence program, which went away almost a decade ago, where now they're talking about 30 million Hong Kong dollars in things like approved funds or stocks or bonds. And so if you're an investor and you want a dividend tax-free, capital gain tax-free environment to invest, Hong Kong will give you a residence permit. Seems they're going to bring this program back, and you can put your 30 million Hong Kong dollars, and it's essentially pegged to the US dollar. Now, Jim Rogers, who we had at Nomad Capitalist Live, has said that, he said historically, they should just switch over and peg to the Chinese renminbi, and basically that would, in theory, just raise the value of that currency overnight. But for now, the Hong Kong dollar has this very tight range for the U.S. dollar, one of the more financially well-organized jurisdictions on this list. Banks are pretty difficult to open with because they just don't really need your money. If you go to Hong Kong, if you know the right people, we deal with some bank account openings in Hong Kong, but even then, it's not for everybody. They want a certain kind of person at each bank, and most banks just don't want you. They have enough money. But you can diversify even without the residence permit, even without the 30 million Hong Kong dollars. You can just buy shares on the Hong Kong market. You can just get any international brokerage account, and you can do that. And you're probably not only going to get higher yields, but you're going to have a better tax situation depending on where you live. I mean, where you live also dictates the tax you pay on investments. But if you live in a tax-friendly place for investors, which is something we help people do, then you've got, arguably for many people, a better deal, especially if you're a yield investor investing in markets in Hong Kong and having that Hong Kong dollar, but also having the peg. Saudi Riyal, 3.75 to the US dollar. You've got a residence program there. Cost you about $213,000 to get out of this never-ending permanent residence in a very tax-friendly country. If you have that kind of money to spare, it's something that we do talk to people we work with as one of the options. I think that the UAE is very competitive in terms of issuing residence permits, but I like something a little bit off the beaten path. So, a donation to the Saudi government isn't really helping you with your currency diversification, but it's worth noting. Once you're in, however, you'll have access to Saudi banks. Saudi shares are hard to get your hands on, but if you're a resident of the country, Saudi banks can work. You can either get a job or you can take advantage of this new permanent residence program. One thing I think is interesting is getting residence permits for the ability to open bank accounts in that country. Many times buying property in a country and sometimes getting citizenship in a country, let's say it's a Caribbean citizenship by investment program or Malta's MEIN program, sometimes that gives you the ability. But I think being resident is pretty strong in terms of saying, okay, I'm going to get a bank account. Or again, you have to have a bank account because if you're a citizen, you don't have to live in the country. But if you're a resident, okay, maintain a bank account to make sure that things are good. So whether it's Andorra, whether it's Bahrain, you have that, Malaysia, for example, you have a bank account. Thailand allows you to open a bank account, get residence. There's a lot of places that put money in the bank, get residence. Ecuador, US dollars. It's not a foreign currency, but you get residence. But when you have, let's say, a Saudi residence permit, you can then go and you can use the banks. And if you want Saudi riyals, then that's pegged 3.75 to 1. Same in the UAE, pretty close, 3.6725. You can get residence. There's a number of different residence schemes now. And so whether it's starting a company, increasingly going to be, I think, difficult for folks who are trying to take advantage of 0% tax. If you want to buy real estate, that's a path to get a golden visa, long-term golden visa in the UAE, buy a piece of property, 2 million dirhams. You've effectively pegged that to a US dollar value, but you're now in the dirham system. I'm not a huge fan of Dubai's banks, honestly, but you can get a bank account. In theory, you can be a non-resident. Being a resident by having the company or by having the golden visa makes it easier. I don't think that their private banking, quite frankly, is on par with what you'd find in Singapore or even Switzerland. I mean, the fees are better than Switzerland. The service is worse than Singapore. But if you want to buy property, that might be one way to diversify. Obviously, the question is there too much property in a place like Dubai? But the UAE is not limited to Dubai. I mean, I was in Abu Dhabi recently. I was in Fujairah recently. I mean, there's a lot of things happening in the country. So there's a number of different ways through banks, real estate, starting your company to get access to that dirham, which is this very well, I think, secured. I think the banks at least are secure. I think the country's secure. And so there are others. For example, I mean, the Bahamian dollar, the Bahamas. I don't have access to that in a Bahamas bank account, kind of like along the lines of Belize. There are more that you just won't have access to. Or again, Cambodia. You can actually earn more money on a term deposit in Cambodia by placing it in the local currency. But the round-trip transaction costs to get that extra, 1.25%, 1.5% probably aren't worth it, even though it trades in this very loose, basically like 4,080 to the dollar. The fact that so many things in Cambodia are just done in dollars almost makes it kind of inefficient. And so those are some. I think the most interesting ones probably in the Gulf region, like the Bahrains, the Saudis, the UAEs. You've got a few kind of in the Eastern Europe region. If you want to basically have the security, the stability of what you perceive, dollars, euros, pounds, but you want the diversification, those are some things to consider. I'm not opposed to taking some currency risk. Again, I've made money in terms of capital appreciation in certain currencies. There's other places where I live and I maintain bank accounts, like a place like Malaysia. You know, it goes up a little, it goes down a little. If it's in terrible shape, I'll buy some in. And I bought a bunch of Georgian lari during the pandemic at like 3.4. And then went up to 2.5. I think I pulled some out while making 13% along the way. Obviously, it doesn't always work out so cleanly. But I'm looking for exposure to other countries in general. I'm happy to take on some exposure because, to me, I don't want to look at my net worth entirely just in dollars. I'm trying to get out of that system. But as a stepping stone to your getting comfortable with that, setting up your first bank account, setting up your first residences, you might want to give some thought to some of those countries. Nomad Capitalist helps people open bank accounts all around the world, whether it's in Switzerland or some of the further flung places. And again, how do you get the most benefits from residence and citizenship and banking and asset protection? And how does that work together legally where you live so that everything keeps humming along? We're happy to help you with that at nomadcapitalist.com.